Hello and welcome back to Core Finance. I'm Matt Brown. This is the first of 3 videos with Ronnie Chopra, who is an author of Wall Street Wires. And first off, Ronnie, we're going to be looking at Barclays, a stock I actually particularly quite like. And I think, judging by your reaction, you probably quite like the stock too.
Yeah, I'm surprised at the underperformance over the last few years now. I mean, especially as the American banks have done so well over the last couple of years. And as we've got a steepening yield curve, this should benefit all the banks. But Barclays in particular, with its Lehman Brothers acquisition in the States, its share price should be a lot higher. I mean, obviously the whole fines situation with LIBOR and the internal problems within the company have cast a shadow over the banking giant. But below £2 at the moment, I think there's a lot of value in them, and there's a fair amount of potential for them to recover. I mean, they've underperformed their UK peers considerably as well, the likes of Lloyds and HSBC, maybe not RBS. But yeah, both those two laggards, those two so-called dogs, have a lot more potential. Barclays is also a major dollar earner, so with the pound still relatively low, don't know how long that will last for. Obviously, I'm quite bullish on the pound. The shares obviously benefit from a weak sterling. So yeah, I don't know if there's going to be further bid speculation surrounding the company, because back in 2006, 2007...
Well, Lehman's were touted as a potential suitor back
yeah,
in the day.
they were, but I think it was Bank of America and Citigroup. And then they were trading around the £7 or £8 mark, and they're a quarter of where they are now. So yeah, bit of recovery, I think, is needed, and I think we'll get there, especially with the underperformance with the US peers and some of the UK banks as well as the cutting of legislation, especially in the US. With all the banks, and that should also benefit the UK banking giant.
Yeah, understood. I mean, I see it in a higher interest rate environment, certainly in the US, Barclays being the net beneficiary of that, and just the staff they have in place. They're putting people in place, they're heading up the investment bank side, heading up the private wealth side. I think they've poached someone from HSBC. So generally they've got the shop in order. I mean, after there were obviously all the LIBOR scandals, we had Bob Diamond leaving, and there are various issues. It feels now they've got that behind them.
Kind of, I think they've thrown the kitchen sink at it.
Yes, and it just feels the market, in my personal opinion, is missing a trick on this stock, and I think it's one that...
Likewise, and especially even in the UK, if we get an interest rate rise over in the next couple of months, obviously banks benefit from the differential between the borrowing and lending. So yeah, it's certainly one to watch.
And onwards and upwards, hopefully, maybe one for next year. We'll keep an eye on that, but in the meantime, Ronnie, thank you very much for joining us.